who's getting the keys.
Nana, get the keys.
Yeah.
Wow. It's your first home. Yay.
Hey.
Congratulations.
Congratulations, guys.
Open the door, Nana. Wow. Yay.
All right.
Yay, it's your new house. Yay.
Oh, baby.
You like it? You like it now you can run over there with your baby sister, huh?
Yeah.
Yay. Go, 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 go.
Thank you.
Happy dance. Happy dance.
So you gotta check everything out first, right?
Yeah.
Take a look at it. So how was the experience? House hunting from the beginning. When did it all begin? Did you just see men online?
Yeah.
Yes.
I've been online.
So how did you run across him?
I guess a sponsored link just
Oh, did you? Okay.
on my Facebook, and after a week or so, I just started following him, and I've been following or watching his videos for about a year before we actually start.
Okay. Have you ever looked for a home before then?
No.
No. So this is kind of spurred on what you needed to do to get to buy a
Yeah. So
home.
all the researching was and all the topics that Min's been bringing up every week really helped out a lot.
Oh, awesome. And then he connected you with one of the lenders,
Yeah.
Arnold.
Arnold then.
Right. And so then Arnold connected you with me.
Yes.
Okay, fantastic. So how was that whole experience about house hunting? I know it's kind of stressful, wasn't it?
Yeah. I kind of expect it to be very long because a lot of our friends says it sometimes takes up to a year or two.
To find the house. Okay.
The first house that we did go see, we wanted it,
Yeah.
and then we're like, oh, maybe we shouldn't jump in already, but we didn't get it anyway. So
Right.
that was the first letdown. We kind of have to raise our budget
Right.
to get what we wanted, and now we're here.
And how does it feel being a first-time home buyer on your first day of doing your piece?
It feels really good. We're excited, we're anxious, and we're very nervous at the same time.
Right.
So
Now it's all yours, right?
yeah. So all the feelings all together.
So what's the first thing you're gonna do?
We're gonna paint.
Paint.
And rip on that.
Yeah. Full fireplace.
Done with it, right? Just
Yeah.
done with it. I'm glad this is like the moment, right? You want to always remember.
Yeah.
Well, good. Congratulations, everyone.
Thank you so much,
All right.
Troy. We appreciate you.
I appreciate you guys as well. Bye.
Locust?
Wave, you wave.
Locust?
Bye. Hello, House Heroes and Wham Fam, and welcome to Tuesday Night Live. Thank you for tuning in. We're here every single Tuesday, 9 p.m. to give you the best and latest on the real estate market. And actually, we've added now COVID-19 and how that's affecting the real estate market. My name is Troy, and this is
Ryan.
And we're here to help you through this crisis time on the real estate side, and Min's here to help you on the mortgage side. So we're happy you showed up tonight and listening to us. We're definitely interactive. So if you have any comments, comment down below. We're very, say hi to us, everyone. Just give us a hi. Hello, you're out there. And if there's any questions that you have, we're more than happy to answer for you. You get the notification button when we're on live, which will be every Tuesday, Friday. And then on with the What's a Mortgage, it's Monday, Tuesday, and Wednesday. Also, if you have any other information that you want to give to us, we have no problem on our messenger. You can hit us, on a private message if you have any other issues or any things you want to talk about. We're more than happy to answer all of your questions. If you know someone that's looking for a home or is in the process or even at the beginning, please share this with them. We'll give them valuable information on what is actually happening in the market, in the news, as well as tonight's topic, Ryan, is...
Don't take my money.
Your deposit. How much do you deposit when you get that offer accepted? When do I send it? And how to protect it. Very, very important. So,
Absolutely.
So talk to us, Ryan. We'll start off what's in the news here. And I mean, every single day there's a different news piece that comes out. Some are contradicting each other. Some are just out there crazy, thoughts. So, but let's kind of go on what's in the news here.
Well, this is an interesting one. This comes from Scotsman Guide, lender-based, research. But they're quoting a first American economist, and he's basically talking about what we've talked about for the last 2 months, that the home buyer pool just may not shrink as much as these jobless figures are, might lead us to expect. And the reason is that a majority of those laid off are entry-level workers, and they're typically renters, and they're people that are just at that point in their life, they're not ready to become homeowners. So it has proportionally hit the younger than 25-year-olds, and those people were not prepping to buy homes. So they're saying it's just not going to hit us as hard as some of these statistics might lead on. So
Yeah.
And that's basically First American's economist, good old Odetta Kushi. So gotta say, hey, happy to hear that he's weighing in on the subject as well, because we're not just making up these figures here. This is coming from U.S. Bureau of Labor Statistics, and we are weighing in from multiple economists across a broad spectrum. And what are they really reading? And then coming back and saying, hey, what is this going to have an effect on us the short term, and what's the effect going to be long term? And end of the day, there again is just more demand than there is supply. And these jobless claims, are they hitting real estate? Yes, I had a deal fall out today, but I didn't even put that home back on the market. We already had backup offers that were sufficient, that the seller is willing to take, and we just took one of those. We didn't even put it back active because we didn't need to. So
right, and again, sometimes people criticize me for actually throwing these numbers out and saying that if you look at them closely, almost 60% are either temporary jobs, or they're restaurant workers, or bartenders, or they're actually retail. You walk through the mall, the majority of people that are hired there are not homeowners. Actually, they probably live with their parents, right? Yep. More or less. And then on the restaurant side, you have a lot of people, their first jobs, second jobs, they're in between jobs. It's not their forever job. It's not what they went to school for. It's just a temporary job going on to the next part of their life. So we definitely want to take a look at that. And I know that the other flip side of the coin is, okay, Troy, we get it. We understand that. The other side is, okay, well then what's with all this forbearance talk and these big, huge numbers of forbearance?
Yes. And, originally we were talking about the COVID-19 curve, and we need to flatten that curve. And this is, right up in line with that. We have been worried about this forbearance, curve, and they are now seeing that this curve is flattened. I heard stats today that were a couple days old. They were talking about 7.7 million forbearances. I've now heard it's like 8.3 million forbearances. But the stat that really stuck with me is, of those forbearances, 40% of the people were actually still current on their mortgage. Get that. So they applied for a forbearance so that they didn't have to pay this month's mortgage, but they paid it anyways. So they basically were applying in case they needed to use that, right? And they didn't need to. So this is one of the things we've talked to people about is, hey, if you don't need to use it, you really are better off not doing so, for a multitude of reasons. They're still trying to work out what is it really going to affect on your credit. Fannie and Freddie have come back and said, hey, you can't show it late. You have to show paid as agreed. But it doesn't mean that you can't have notes in the system showing that there's a forbearance. So now they're kind of trying to come back out and say, hey, now we have to take off that verbiage as well. We don't want people to be affected at all. End of the day, if you can make your payment. It's better for you in the long run. That way you will have no repercussions on it. But there are people out there that are kind of a little worried, right? They're like Top Gun flying that jet, but they got one handle on the ejection seat,
Nervous Nancy's.
That's it. So I don't blame them. I understand why they're doing that. And if you're on a job that might teeter, you might not be too sure. Like the deal I was talking about earlier that fell out of escrow today. The guy's a teacher. They just said that they don't know what's going to happen next year, so they're not giving him another hire letter, that he hasn't actually been fired. They're not bringing him back. They just don't know what the next year is going to entail for them. So they can't commit now. Well, that's the same thing. Had he gotten a loan, he might be one that might make sense of, okay, I need to kind of look down the path here and see, hey, should I have a backup plan, right? So this is very interesting here. The forbearance curve is flattened, and those numbers we're seeing, you also need to look and say, okay, of the 8.3 million that have, filed for a forbearance, how many are actually using it? So that's very, very interesting stat there as well.
Well, let's go over what a forbearance is, first of all.
let's do
So a forbearance is when you've decided, hey, I can't make a payment, or I won't make a payment, right, in this case, in a lot of cases that are happening out there, and I want to kick that can down the road. So I'm going to take the payments that I'm missing, depends on how many that the servicer or the owner of that note is, how many of those will they allow me to go ahead and take it out and then add it to the end of the actual of my term. And so what's happened when we first hit COVID, that was a big topic. It was going to be unemployment, and then wow, how do I make my payment? And if I get unemployment, it's not going to be able to cover all my bills, and the first bill that I have to miss is not going to be my food bill, right? It's not going to be my electricity or my water bill. It's going to be my payment to my mortgager. And so with that being my mortgage company. So with that being said, there was no guidelines when they began this. So I know that Gavin, the Gavinator, went in and talked to several different banks, including Chase and Bank of America, and he immediately wanted that to happen, and them to accept forbearances. And then the federal government came in and said, yes, we'll do 3 months. And subsequently they said, yeah, we're going to go 6 months. But there's been no guidelines for it. So literally anybody and everybody, regardless if you had, filed for unemployment or you have your job, you have no problem making the payment, they're allowing all these people to have a forbearance. That is our problem that we've had. We just didn't think it through. It was a push the panic button decision. And now what's happening is that you have all this kind of chaos that's going on with it.
Yeah, so there's chaos both for the general public, the person that's doing the forbearance, but there's also chaos on the back end, and that's what we're hearing a lot of this. Servicers, are having liquidity problems and stuff like that. And it's just, when you hear that back end, issue, think of it like this. Let's say you own a 50 unit apartment complex and you hire somebody to go collect your money. But what you say is part of your job is, no matter if you collect that money or not, you're going to pay me. I'm going to be on vacation somewhere and you're going to pay me every month for all 50 of those residences, whether or not you collect it. So you're now the superintendent, you're going to go out there, you're going to collect all 50 people. But if you're short one, I don't care, pay me my money, right? Because I'm going to be on vacation and I want a set return. So that guy goes out and all of a sudden, 1 or 2 not paying, not a big deal. He can front it, for a few months until he gets somebody else in there. All of a sudden, when you've got 8% of the population, of those units not paying and he's fronting it, he ends up with a cash crunch. And that's what we've been seeing. So Fannie Mae and Freddie Mac have now said, okay, we will go ahead and cap how many months that you have to front that money on our loans only. And we'll even give you a little stimulus for it, $500 per, let's call it hotel room, per loan you service. And then with FHA, they're saying, hey, we will actually take that loss. You can pass it through that loss with us. So, they'll cover that. And that's what we've seen getting worked out on the back end. And that's some of the crunch that is, kept other loans from getting done, because these servicers are like, whoa, we don't want to take on more rentals that we're going to have to potentially front this, this rent money to some dude on a yacht on vacation, right? So they're saying, whoa, let's hold off. And so the federal government's been a little slow to react to help, ease that. Originally they came out and said, hey, tough luck. If some of you have to give back that business, give it back. If some of you are going to go under, so be it. And now they've softened that stance. And so, they're trying to work through these, these issues that they've got with the process, both for the general public. How's it going to affect your credit? What is the long-term recourse going to be for you? And then also the back end, these businesses, how are they going to keep them from being impacted so that they keep lending money? So on that note, you end up with over here that Fannie and Freddie will now allow borrowers who took forbearances to refinance their mortgage. So to help alleviate that front end, they're saying, hey, and on top of it, we will let you refinance. And I think it was, don't quote me on this, but I think it was like after you've made 3 months or something like that, after you've shown that you've got that ability to repay, that then they will allow you to refinance. And with rates low, that is an important thing for a lot of people, especially if you've got equity and you need to be able to have access to that equity to pull it out for a safety net or something like that. Now you might have that chance to do it if you can bring your loan current again. So
there's a few shout outs before we jump into any more of the news here. It's Margarita Garcia. How you doing? Thank you very much for joining us. Johnny Mejia, hey, nice, and thank you very much again for joining us as well, Johnny. Chang Lee, thank you as well. Hello. Is it Lusano Diaz? Thank you very much. Marietta Garcia, what's the best website to check for homes? You know, actually, Marietta, I get with your real estate agent and put you on an auto search.
Yes.
You know, absolutely. When you're actually looking for homes, the most current and updated information is coming from an auto search from a real estate agent. It is not from Zillow, which we now, time after time now, they're really behind because the market's moving so quickly, as well as Realtor.com or any of those other ones. Yeah, go directly to your real estate agent, give them the criteria you're looking for, and they'll get you on an auto search. Perfect. And then, Sean Lee, I want to confirm that the forbearance mortgage will defer to the end of the loan. Hope that made sense. Absolutely. It defers to the end of the loan. So basically whatever you're not paying now, however months you've worked out with your bank or servicer, yeah, it gets tacked on the back.
And that's for Fannie Freddie. So you have to make sure you know who your loan is serviced by
and who owns
it on the back
right.
end. So we're primarily talking about Fannie Mae and Freddie Mac here.
FHA.
And FHA as well. So if you have a Fannie or Freddie or FHA loan, yes, they have said that they'll go ahead and stick it on the back, which is pretty amazing actually, because you get rent-free now, and that mortgage is going to, the future value of what that money is worth, which is nothing. So it's a pretty good deal if you need it. To be honest with you, with the Fannie, Freddie, and FHA stuff, but other servicers have different plans. Some of them will make you, repay it quicker. So you've gotta figure out what is in that fine print. If you have questions once you've talked to a servicer, please reach out to us. What's a Mortgage, the House Heroes. We will definitely help walk you through that. So let me do a couple shout outs too. What's up, Roxy? Good seeing you. It's good seeing you and your niece in here today as well. Greta says, hey guys, we're excited to get back on the house hunt. That's awesome. We're excited for you. It's a new world out there though. You got gloves, you got masks, and we'll kind of flip through some of that in another COVID-19 new rules segment we're going to be working on. And then Chung Lai, what's up, buddy? Getting ready to close escrow hopefully tomorrow on an awesome rental. That was definitely a steal. So it was a short sale that the buyer had given up on, and we swooped in and locked it up. So that one was way under market and cash flow as well. So I'm looking forward to that for you. And then Martha, what's up, Martha? Good to see you on here. Thanks for checking in with us. So if you guys are new, definitely please go on, click to follow and like us, both on the House Heroes and What's a Mortgage. And then in the link for the comments, you should have the bit.ly link to our YouTube. All of this is getting put on there as well, so you can follow the weekly market updates in order. You can follow our normal segments and topics, and we're going to start putting them in order, whether you're a seller side or buyer side and stuff like that. So it's definitely a good resource. Go ahead and subscribe to our YouTube channel as well. We're going to be having a lot more content that's YouTube only on that as well. So
I got a couple more shout outs. Lisa Segala, how you doing? It's been 9 months. We're really excited. I know you went out with Roxy yesterday and you put an offer in, hopefully get accepted. I know she's really excited about getting the prospect of getting you in a house. I know we're excited about it as well. I know I talked to you about 9 months ago. I think that, or even more, and that journey hopefully is coming to an end right now. So I'm really excited for you. I have Melvin saying, hey, Troy and Ryan, hello.
What's up, Melvin?
How's it going? Rosita Princess, how you doing? Top fan there. Great information. Troy and Ryan's Ivan Mark. How's it going, Ivan?
What's
Man,
up,
it's
Ivan?
been a long time. I know it's last week. It's been a long time before that, right? Shane Lee, how is the cash out refinance right now? At the beginning of the COVID-19, no one was willing to do a cash out refi. That's a good main question, but I don't see it happening until everything, the banking stabilizes, and we come to a more stable economy. I don't see cash out refis. The banks are always going to be scared. And it's and the big way you could tell is that, here comes along this big giant Wells Fargo and says, well, we're just going to wipe anything out. We don't want to do any loans under 700 FICO. There's a scared bank right there. That's a scared bank. So I don't think we're going to see that anytime real soon with the next month or two, but I think it's in the future it'll definitely come back because we're seeing stable values.
They're there, but Troy's right. They're basically, they just want to work with cream of the crop. So if you fit in the box, that's low risk, absolutely, they're doing cash out refis. They expect them to trend up, but you got to fit in their box. You got to meet the criteria. So
here's another question, Ryan. For FHA loans, will they be able to extend on the payment deferment during COVID?
Yeah, so that's what we're talking about with the forbearance,
absolutely.
the missed payments. They basically, let's say you missed the next 3 months payments and you've been approved for a forbearance. You miss those 3 payments, they tack them on the end. So years, year 30, you've now got 3 more months, of payments out there when that payment's worth practically nothing, and it's all going to principal anyways.
So this is a very interesting topic, and I definitely want to bring Min in one of these days and have a conversation. So I have a forbearance, Ryan. And then next, does that show up on my credit report? Let's say there's 2 different questions here. One is if I'm late, does it show up in my credit report that I do a fair forbearance? And number 2, if I'm not late and I'm still doing a forbearance, does both of those scenarios show up on my credit report?
Anytime you're late, you're more than 30 days late, they're going to flag you. So if you're just a hair over 30 days, you might not get flagged. When you're rolling into that next month's payment, you're guaranteed to have a 30-day late on there. You don't want that. Every servicer is a little bit different on how quick before they report that. But technically, if you're over 30 days late, they can issue on your credit report a 30 days late. Most of the stuff we're talking about here is on the forbearance. When you call the servicer ahead of being late and you file the paperwork to get the forbearance, they, Fannie and Freddie, if your loan is owned by Fannie and Freddie, they have given guidance and says, do not mark them late if they file for a forbearance and it's approved. So they're not supposed to mark you late. But what some servicers were doing was in the comments, they would note forbearance. So now if you're going to refinance, that new lender is going to see, oh, look, they were in forbearance. I don't want anything to do with it. I'm not going to touch it with a 10-foot pole. And it's going to create a hardship. So that's when Fannie and Freddie came back and said, whoa. Hey, and by the way, now they're trying to say, don't put any comments in. And so that's the most recent argument is we want to make sure that it doesn't show up anywhere that this person was in forbearance, on their credit report and impact of credit.
Yeah.
So
make sure you guys know that and understand it, because that impacts your credit, even though you might be, you're still at your job, you're still doing well, and all of a sudden, you'll say, hey, I need a forbearance just for a month. I want to see, the job might be unstable somewhere and I might lose it, but I want to have enough cash on hand. And then you do it, and next it impacts down the road on another refinance or even buying a car or other credit related, products that you want to
And that's the thing is, we know all of these agencies are imperfect. And so they've got guidance, they've got ground rules that they're creating as you're playing the game. The safest way is if you can make that payment, just make the payment. Just make the payment. That way you've got with 100% certainty you're not going to have any issues. But if you need to use this tool, you need to use this tool. And so ask the questions, figure out who owns the note, ask your servicer these questions, and your servicer is who you're cutting that payment to. Whether it's Wells Fargo or, a Service Link or an SLS, there's a bazillion companies out there that take your money. They're that superintendent taking your rent essentially and paying that guy on the yacht, So, you need to ask these questions. What is, the note holder on the back end? What is their, what are their guidelines? And then what's this going to do to my credit? Ask those questions. So, then back in the news. So mortgage refinancing is set to surge to a 17-year high. So again, with low rates, now you're talking about people who might have had forbearance, they're able to make payments. Some of these people, they want to say, hey, you know what, maybe I've been in this 5 years. I even want to lower the payment and I want to kick it out another 30 years. I know men would say, why would you do that? You've already wasted 5 years of interest. It's not a wise thing to do, but some people just want that low payment and that low comfort. Troy is talking about cash out. So there are multiple tools. No one is 100% right for every person. So you just want to know what are your options, what are your tools, and know, hey, these are the pros and cons of each. So some people are talking about recasting out 30 years. Some people are pulling cash out. Does it make sense for everybody? No. Does it make sense for some people? Yes, absolutely. And that's why we're saying that the risk of foreclosure is a lot less, because people can use that equity creatively. So they're expecting a 17-year high surge in refinances. So that's pretty wild. So
what our topic is tonight, Ryan, go over our topic tonight.
Yes, I want some gal to hand me a big round coin, apparently.
So if you're in escrow right now, guys, hey, congratulations. You worked hard. You looked at different homes. You wrote offers. And you dealt with a multiple offer situation. You're nervous. You're frantic. You're anxious. You're trying to get that, and boom, you get that phone call from your agent. Hey, congratulations. Our offer was accepted. So now all of a sudden, the power that was in the seller's hands is now in your hands.
That's it.
But what you did was you agreed to on that contract to give a good faith deposit to the seller, saying that you're going to go forward with this and you're going to put your money where your mouth's at, right?
Yep.
And so that's what initial deposit is. How much, Ryan, do you usually see that initial deposit?
So normally it's 1 to 3% of the purchase price. Now, if you're doing an all cash offer, it's normally closer to 10%. If you're a first-time buyer, FHA, VA, 100% financing, down payment assistance, you're going to be closer to 1% or even less. I mean, some of these down payment assistance, we're talking $500 for a $350,000 home. But you want to show a good earnest money deposit so that seller knows you're serious. Again, you need to talk to your agent and ask them, hey, what should we be putting down? If that agent already has talked to the other agent, there's no offers, they're willing to work with you on, let's say, a down payment assistance loan, maybe you can get away with $500 because that's all you've got with you right there. But right now, in the market as hot as it is, I'm seeing 3% on a lot of my counter offers. So we'll start with somewhere around 1.5% deposit that we're saying we're going to put down. So on, let's say a $500,000 home, I'm writing $7,500 down as a deposit. We'll get countered. Hey, we want 3%, $15,000 as a deposit. We see it regularly. LA County has always been notoriously, closer to that 3% price, or Orange County, LA, and Riverside. Orange, Riverside, and San Bernardino have been closer to anywhere in that 1 to 3 range. But that's what we see. So just, talk to your agent. Depending on the type of offer you're putting down, how much money you really have is really going to dictate what that, down payment's going to be. But normally 1 to 3%.
Going to the next slide, Ryan. That's exactly what you talked about.
Bam! How much should it be? You led me into it, but I didn't scroll. Sucker.
When do I wire the funds? Okay, so we have a contract, right? And we've agreed on an X amount. So when do I wire the funds? Well, escrow needs to open first. And when escrow opens, the only way we get the paperwork rolling between escrow and all the money through escrow is they don't want to do anything until your money is in there. That just shows how much you're serious about buying this house.
That's a great point. I mean, the loan can't get started until they have escrow instructions. And the escrow company doesn't want to spend the time to put together escrow instructions until you've wired your money, because they want to see that you're serious. And technically, when you talk to an escrow company, they say they can't even do anything on it until they've got those funds. I know some escrows will take care of it and try and speed things along, but just know that you're holding everything up as well normally until you get that deposit in. The contract says it has to be in within 3 days. Get it in that very day if possible. Know that wires normally aren't going out on weekends, and a lot of banks right now, especially due to COVID, you've got to set an appointment. Mm-hmm. We've had a lot of issues recently where the client will walk into the bank to send the wire because we tell them to do that. They end up talking to a teller who says, oh no, we only do wires by appointment, but you can go ahead and do it on your phone. The client goes, okay, I guess I'll do it on my phone. They go to their phone. Next thing you know, they're doing a bill pay check to the escrow company that's going to take a week to get there. And we've got to completely reverse that and try and hunt down that check and money. Or they're doing an ACH transfer and escrows can't take the ACH transfer. Or they might get lucky and actually do the wire. So if you get your acceptance, it's highly recommended that you set an appointment with your bank so you can walk in and have them go through the wire with you. Know that it normally costs about $30 for your wire transfer fee. It's worth every penny to know that it's done right, it gets done that very day, and you've got paperwork to track that money. We've had major issues recently where it was an ACH or it was a check, and the check was the worst because they debited the account. It was out in La La Land, paper trail somewhere being sent to that bank. It wasn't being sent to the escrow company. It was being sent to that escrow company's bank. So we had to alert all kinds of people to say, hey, look for a check that was improperly made out to the escrow company that's going to be going to your branch is a bill pay check. And in the meantime, the client didn't have the money for the deposit. So now we're out of contract. And so it was quite a major issue that could have been solved had he just set the appointment, or the bank would have actually just taken the time to say, hold on, let's get somebody out here and take care of you. So just know now that we've had these issues with COVID and the banks wanting to have set appointments, we're warning everybody, set that appointment. And it's worth the $30. You might save $5 on your phone by doing that wire, but it's just safer to do it in the bank branch.
Yeah. So let's go one step further. How do I protect my funds? Right?
Boom.
So before I walk in that bank, and actually one of the documents that you sign, of the many documents you sign for your offer, is wire fraud, is to understand wire fraud. And we explain this to our clients every single time. Before you wire your money, I don't care if it's initial deposit, I don't care if it's the remaining funds needed to close, before you walk in that bank, you're going to receive from escrow or from a transaction coordinator, a paper on how to on the bank accounts and how to wire everything in. Well, I always tell my clients, and without doubt, when you're in the parking lot of the bank, call your escrow company and ask them to go over the information so you double check and make sure the information is accurate and it's not from a third party that's in Nigeria that's looking for you to send their wire to them that you're never going to see again. I know we did it about 7, 8, 9 months ago. We did this exact topic, and there was a guy who sent in Oregon who sent $107,000 to that guy in Nigeria, and he enjoyed it, and the guy did not, he almost lost his house. He became a national spokesman for First American on what to do right. The title company paid his $107,000 back so he can get into his house.
And that was an interesting article I was starting to read today, is who pays if there is wire fraud, and you are not necessarily protected.
No, you're not.
Technically you told the bank where to send that money. So it is imperative that you call that escrow company. A lot of times these escrow companies now, when they send the wire, it's an encrypted email. Their wire instructions, it's an encrypted email. And even when you get that PDF, it'll have the account number blank on their wire form so that you're forced to call their local phone number. And by then you should know who the escrow company is because you've talked to your agent about it. It's in the contract or counteroffer. And it's a local phone number.
Yeah, very, very good, Ryan. I want to get a couple more shout outs before we wrap this up here.
Absolutely.
Want to let's go see Chang Lee is are you guys seeing an increase or decrease in HELOCs? Well, we saw the completely decrease the second this happened. We saw a huge increase right before it happened, and then we've seen a huge decrease because the banks actually cut them off, and it's almost down to nothing. We have Rochelle and Alex Santiago. Hey guys,
what's up, Rochelle?
Santiago, guys, I'm so excited. I can't wait to see the pictures of inside your kitchen. I know you bought a house with here the Wham Fam and with the House Heroes. Probably it was 9 months to a year ago, and you were gonna rip out that kitchen and you're gonna put a new kitchen. I was so excited to see it. Please send the pictures over. And again, we're on the 1 year congratulations coming up really soon here. So glad to see you guys tune in here, and we're definitely looking forward to all those photographs. Let's see here. We also have a question here, Ryan. It's Nayali Salazar. She's asking, what would be a good time to purchase a property?
Now.
Wow.
If you're planning on staying here for a few years, absolutely get out of the rental rat race, buy a property, talk to a lender, see what you're approved for, see what your mortgage payment would be, and then go ahead and look at properties in that price point. Get with an agent and get with a lender right off the bat to check the feasibility, and then go through and put you on a path to homeownership.
Yeah. First step is get approved.
Yep.
Go immediately get approved. You can ask Min all the questions you want on the Wham channel, and he'll go over with you what's the best loan program, and then get with the realtor. You
get on an auto search. The biggest thing is with the auto search is, even while you're maybe getting paperwork, maybe you're straightening out some credit or saving some money for down payment or paying off a couple cards or just getting ready, lease is getting ready to be up. You want to look at what's coming on the market and what's going off the market and what things are transacting for, so that when you're ready to pull that trigger, when you're approved for that mortgage and you see a house you like, and you're comfortable putting in that offer and getting in the action fast. The worst thing is when people aren't paying attention to what's going on in the market. Maybe they see a home on Zillow or something and they're like, yeah, that one's been on there 90 days. It's dropped its price 3 times. The market must be slow. No, because when we go and we look at the private remarks on that property, it's, in the private remarks, it says, oh yeah, tenant occupied till December. Tenant's not paying rent. Buyer to take that property with the tenant. Well, of course it hasn't moved for 90 days. Of course they've done 3 price reductions, because nobody wants that. It is a dog with fleas. It's already overpriced. Nobody wants that risk. It's going to be on there till December. And we see that time and time again, that people just don't have an idea of what's really going on in the market, what they can get in their price point and how fast that moves. And so you want to be on an auto search so that the second you're ready, hey, this home I'm seeing over here, I know that it really is going to have multiple offers. I know I need to get my offer in quick, and I know I'm going to be happy with that home at the price I'm paying for it. So,
all right, so let's wrap this up right here. It's my deposit. How do I protect it? And that's one of the few things I tell my clients right when we go into escrow. My job is to protect your money.
Yep.
And I'll say that 2 or 3 times. My job is to protect your money. And what I utilize to protect your money is the 3 contingencies that you get in the contract that you negotiated and you both agreed upon. The first contingency is that you have a home inspection in which you go through you get a home inspector out there, he takes a look at it, then you and your real estate agent will then have a conversation and then ask the seller to fix everything that has to do with health and safety. You want that seller to fix. Any bigger problems, you want to have a discussion with your real estate agent and then ask for either a price reduction or some type of credit towards closing costs. But that's the first contingency. They cannot have your money until you pass that contingency. The next contingency is going to be your appraisal contingency. So you want to make sure that the house comes in at value or even greater. I've been seeing greater ones just even lately. That's very important. If the house comes in less and you guys cannot negotiate with the seller, what happens? You can back out and get all your money. That's my job. Protect your money.
Absolutely.
So I protect you about the house. I'm going to protect you about the value of the property. And the third is, Ryan?
Loan contingency.
Loan contingency.
And this is kind of a funny one, because even if you have to remove an appraisal contingency and then it doesn't appraise, technically your loan's not going to get done. So there's some gray area there. Same thing, all of a sudden if your credit, drops off a cliff because you didn't follow the don'ts while buying a house, like don't buy a car, don't co-sign on a loan. You broke one of those huge no-nos and all of a sudden your credit tanks, or all of a sudden you don't have the money that the loan program is going to require to put the down payment. You get denied for the loan. The biggest thing is you need a loan denial. You get that loan denial letter, and then you can use that contingency. And that's that last, gap stop. So once you're, signing the CD and you've got an underwritten approval, that's when you need to be removing those contingencies. And along the way, we always have that conversation. So like Troy mentioned, when you're negotiating for repairs and the seller agrees to your repairs, it basically is saying we're agreeing to do these repairs if you remove your contingency right now. And you're signing on this request for repair answer saying that you're going to remove your contingency at the same time. And you send over that first layer of removal of that contingency. And then again, once the appraisal comes in, then you'll be removing that. And you want to make sure you're on those timeframes in good faith so that you're not upsetting the seller, because sometimes you just get down to that end and you need an extra day or two, and you want to make sure that you've been, in good faith negotiating all the way through. So.
Yeah, I mean, and literally we've run into people who have really bought cars at the very end or done
two cars at the very end.
Buy one, get one,
not
free, obviously.
When you have 2 daughters, you buy 2 cars.
and our job still at that point is to protect your money. And
Absolutely.
that deal still closed. We still made sure that they were not going to lose their money. And on the other side, as a seller, we've actually taken buyers' money because agents aren't on top of their job.
Absolutely.
And so it's hurt them if they go through and they sign off all contingencies, and now the money goes to the seller, and if they don't close, the money stays with the seller for good. So make sure you get the right real estate agent to protect your last contingency so that your money is completely protected all the way through.
And I'll give one last little nugget as well. When you're signing through the offer, there's just ridiculous amount of pages. I know most people are just click on DocuSign nowadays. There's an optional one. I make it required for all my buyer clients, and it's the liquidated damages provision. That basically states that if for some reason you removed all of your contingencies and you fail to move forward, the most money that the seller can take from you is whatever money you've deposited in escrow up to 3% of the purchase price. So if you are a cash buyer and you've got a 10% deposit, and then let's say the market, just humbles, and you decide, hey, I'm going to not buy it now, the most that they can come after you is liquidated damages is for 3% of that sales price. So if you are a buyer, you want to make sure you are initialing the liquidated damages provision. Ask your agent about it. That is like a number one, buyer safety net is a liquidated damages provision.
Yeah.
On that same page is another optional one that's basically mediation and arbitration, saying that you'll go to mediation and arbitration before a protracted lawsuit. That's a good one for everybody, buyers and sellers. If you are a seller, and this is a big one for Troy and I when we're flipping, we don't like the liquidated damages provision, because if that buyer backs out and there has been, let's say the market's, on a downward spiral or something, we've got a house with nobody living in it. We have true damages and carrying costs. So on a lot of ours, when we're the seller and it's a vacant property, we will actually counter out the liquidated damages provision, or we will not initial it to begin with. But make sure when you're a buyer, you're initialing that provision. If you're a flipper seller and you've got a vacant home and you're worried about getting damaged, then hey, you might not want to be initialing that provision.
Well, guys, hey, thank you very much for tuning in tonight. Hopefully we got some valuable information. If you want to have any other comments, please just leave them there. We're more than happy to answer them. I know Min's on right now, and he's been answering questions right now.
Oh, that's awesome.
For everybody as well. So we actually are live 2 days a week. Actually, 3 days a week. We're live tonight, Tuesday night, live. And then we have our Spanish edition, on Thursday at 8 p.m. And again, deal of the week every single Friday. If you go to our YouTube channel, we have several different other shows that we record. And we have weekly market update. We go into the numbers. We do all the numbers on every single Friday afternoon, and we show you what each county and what's happening in each county, what's softening, what's just tearing off and going on fire. We show you those numbers so then you can make some more educated decisions when going out there and looking for homes.
Yep. Look forward to seeing you guys here on Thursday if you speak Spanish, and Friday for that deal of the week. And looking forward to getting that market update on there. Really looking forward to seeing what the new actives, pendings, and solds are going to be bringing in this week.
Absolutely.
So, awesome. Well, thank you guys for joining us. Just want to say peace, God bless, and we'll see you soon.
Good night, Wham Fam, and good night, House Heroes.